This is John Thomas, the Mad Hedge Fund Trader, with you today in Miami Beach, Florida. I am broadcasting to you from high in the towers of the Fontainebleau Hilton, now known as just the Fontainebleau since it got condoized. And I see out to the east, huge ocean with cruise ships and container ships and the occasional tanker passing by. So it is a wonderful environment to broadcast from. We have great internet, about 200 megabytes a second, so no problem broadcasting today. Let's see, go ahead and put in your first name and where you're from. And I see Nick from Alaska, Vincent from Northern Ireland, Mark from Idaho, and getting a lot of questions in here too. We have here Nicholas from Napa. We have Barry from Naples, Florida. And we have here many thanks on the gold and silver trades. Let's see, we have Curtis from Melbourne, Florida, Nick in Naples, Randy in Merritt Island, Florida. Gee, a lot of Florida people today. And all right. Okay, so let's get the show on the road. Taco is back. As we all know, this means Trump always chickens out. And what that means is that Trump threatens to blow up the world practically on a daily basis, and then walks that back and then claims he have a deal. Of course, we never find out the terms of the deal, what the deal is. And by the time we're wondering what that is, we're on to the next crisis. So it's a crisis a day, a black swan a day. And markets don't seem to like it very much. Gold and silver absolutely love it. All of the classic end of the world trades. So let's get on with the show here and play from start. Okay, let's go to it. One very happy concierge customer invited me out in Sarasota on his 50-foot boat, which was paid for by a single trade, I'm told. I think he got into Tesla when we recommended it $2 about 15 years ago. And what good is money if you don't spend it? On a yacht, on a college education, on your own retirement. No point in making money if you can't appreciate its value by spending. And I have proven better at that than almost anybody. So perfect trade, enjoy is all I can say. Performance, we're still maintaining 24 consecutive months of profitable trades, up 0.72%. So far in January, we're 100% cash. That is a new all-time high. We're up 814% since inception. So following a stunning series of profitable years for the Mad Hedge Fund Trader. Here's our trailing one-year performance. We're up 62.83%, new all-time high. And what I'm trying to do is minimize my volatility while the market volatility is increasing. Most people talk about that. Very few actually deliver. I'm one of the few who can. So I've been doing this for so long. And we will continue to deliver. 18-year average annualized return, 50.66% versus 28% for the S&P 500. Notice the S&P gains are slowing, and that reflects the daily uncertainty hitting the financial system. Driving around Disney, I started in Orlando. This is to attend a conference, and this is in a nearby town called Celebration. Is a town completely designed and built by the Walt Disney Corp. So all of the buildings have Disney type design characteristics, something you've never seen before, like it might appear in a cartoon like this one. Currently have no positions. We let our last position expire at max profit, and we are waiting for an entry point. And remember what happened February last year? We got the entry point of a lifetime on the short side. So a couple key dates coming up where that might happen. We'll talk about those in a second. And I very rarely have no positions for more than a couple days out of the last 20 years. There all are no low risk positions, only high risk, low return ones. Sorry, folks, but that's what the numbers say. Trading here with the VIX at 15, 16 makes no sense whatsoever. And these are the big risks for the market. Let me take a couple of questions first. Mark is asking, are muni bonds a good investment here? And I would say, answer yes. You get the tax-free status. If you have a local muni bond that's yielding over 5, which you can get if you get the full federal, state, and local tax exemptions. But that is a very localized investment, and you have to talk to your local broker to find out if there are such things. My guess is that you in Idaho probably have a few of these things available to you. And even if we get a financial crisis and the federal bond market crashes, local munis are are a safe place to be. I remember in the '08 financial crisis, a well-known talking head predicted that there would be 2,000 defaults in the muni bond market as a result of the financial crisis and the stock market going down 50%. In actual fact, we only got 20 out of the tens of thousands of muni bonds out there. Okay, so these are the big risks for the markets. Everybody knows everything. Even my cleaning lady knows all the positives in the market. So the risk is all the good news already in. There are no surprises that we're getting tax cuts, that the next Fed governor will probably be the most dovish one in history, probably an Arthur Burns repeat, that interest rates are going to fall, that the government is continuing massive spending financed by record borrowing, and AI is improving the profitability of large companies, having no effect at all on small ones. So these are all the positives that are in the market now. What we don't know is the next dozen or so black swans, and that only takes us out 2 weeks, and the next government interference in the stock market, of which there have been dozens. We have the US government taking stakes in private companies, ordering companies to pay them a portion of their sales, and demanding that Trump supporters join boards of directors. This happened in dozens of companies. So this is what we don't know. And it's what we don't know is what moves markets, not what we already know, which is in the market. So watch out for the black swans. I'm waiting for a good one to get back on the long side in this market. And of course, shorting is very high risk too. And most people aren't able to do it anyway. So that is the problem with the market right now. Okay, here's another question. Why has gold gone parabolic? It used to be so boring. Well, that's a very easy answer also. First of all, gold is a classic inflation play. And with falling interest rates, a hot economy, uh, uh, and rising prices, gold is your classic uh, inflation protection. To that, I can also add silver, copper, molybdenum, cobalt, platinum, palladium, and basically anything hard. And all of these precious and base metals have just had absolutely astronomical moves over the last several months. all on the inflation story, which is common to all of them. Chinese are buying copper ingots because they're worried about inflation, and it's safer than their own currency. So that is the story. And also, it's safe to say that political instability in the United States now is at the highest point since the Civil War. And that has a lot of foreign investors getting scared out of our market that things will get worse, which they almost certainly will. So, all a great gold and silver uh, inspiration. And, while I did sell all my long-term positions in gold last year, I am trading it on a weekly basis. I'm doing the weekly options, buying at the money call spreads 5 days out. On Monday, I take a look at the world, see what it looks like, and if I like it, I buy, in the money gold call spreads that expire in 5 days. In other words, I become a meme trader, which is accounting on some days for up to 40% of total market volume. Okay, so let's move on. Government shutdown in 2 days, or we get a Supreme Court decision against tariffs, and we get a Fed interest rate decision at 2 p.m. Eastern today, which is an hour after the end of this webinar, a press conference at 2:30. So if you're looking for uncertainty, there's a boatload of it right there. Flight to safety, inflation protection assets like gold, silver, and everything else, extreme all-time highs, hugely overbought, but seem to be going higher. Gold's at an all-time high right now. Bonds are dead in the water on a 42 trillion national debt, 45 trillion if the tariffs fail at the Supreme Court. Long-term bull arguments of super liquidity, AI, falling interest are still the market drivers, but much is already in the price. Jobs data are bad and getting worse. Nobody is hiring. Eventually, but what is happening is the population is still growing, and that means the jobless rate will continue to rise. How far the stock market can rise in the face of rising unemployment is a major question for all traders and investors. Huge oil supply weighing heavily on asset prices. We did get a Venezuela bump. That may be temporary, especially if the oil companies refuse to put their own money at risk, bringing Venezuela online. US dollar 4-year lows against all currencies. Even the yen has started to rally against the dollar. That's how bad things are. And Bitcoin trying to hold around here at the cost of production at 85,000. That's held for 2 months. If it holds here much longer, we may get a decent rally, 25 or 50%. So start lining up your crypto plays. There may be some good action here. And my guess is that when gold and silver peak out, whenever that is, Bitcoin takes off like a rocket. Okay, global economy breaking up. Let's go to the next questions. Will a weak dollar support the stock market? And the answer is no. If you're a foreign investor, even though the S&P 500 was up 17% last year in dollar terms, in foreign currency terms, it was up either only 2% or unchanged on the year. That is not an attractive investment if you're a foreign investor. So it scares people away. Why buy a depreciating asset denominated in US dollars? If foreigners are investing in US stocks, they are hedging out their currency risk. And I've done many pieces on those over the years on how to do that. It also makes our exports cheaper because they're priced in dollars. But if you've instigated a trade war against your trade partners, which the president has done, then that gets you nothing. People don't want to buy your stuff at all if you're being retaliated against with 25, 50, or 100% tariffs. So at the end of the day, the tariffs will bring a smaller U.S. economy, slower economic growth, more unemployment, and smaller global growth. It's bad for everybody. Globalization made everybody rich simultaneously. The retreat from globalization will make everybody poorer. Just a matter of numbers. There's no opinion there at all. Okay, so global economy, Fed in 2 hours, government shutdown on Friday. Democrats have signaled they will not vote for any bill that does not defund ICE. US GDP growth set to rise at about 2.5%. That is slower than last year, which was 3% and 3% the year before. So again, end result of these government policies are slower growth, higher inflation, higher unemployment, and a weaker US dollar. Who's the winner in that one? Core PCE still rising like clockwork, 0.1% a month. Consumer spending rose 0.5% in October. Apparently, nobody looks at the economic data except me. S&P PMI comes in flat. Consumer sentiment collapses. Retail sales beat. Core capital goods rose 0.7% in November. That's largely because of the government subsidy on full expensing of capital spending in the first year. Companies are bringing forward the next 5 to 10 years worth of capital spending to this year, so they get the full tax write-off. Mad Hedge Market Timing Index at 65, approaching sell territory, and we may be there in a couple of days or weeks if we continue at this rate. Although my bet is today we go down. Dow is up only 34, and the SPYs are unched. Okay. Okay, Mad Hedge Market Timing Index. We're up here at 65. Get anywhere over 70, we start entertaining short opportunities. And believe me, there are a lot of them out there. Weekly jobless claims basically flat at 200,000. And this is something you see a lot of in Florida as I drive my way down to Sarasota. Seniors heading south for the winter. You literally see tons of these on the freeway. So Florida is still attracting the retirement crowd. Okay, let's go to more questions here. Why is oil up on the Venezuela news? And the answer is almost all of Venezuela's infrastructure was built by American companies, Halliburton, Schlumberger, and if the U.S. is going to be rebuilt, those will be the first companies to be invited back because they still have the plans on the original construction of their oil infrastructure. And that has created a short-term boost in the price of oil, but medium term, the outlook for oil still looks dire. If they succeed in bringing Venezuela from 800,000 barrels a day up to 4 million, that's a 3 million new supply on the oil market. And if the Ukraine war ends, that brings at least another 5 million barrels a day on the market. That is a giant swing, and nobody wants to trade against that. So expect oil to remain weak and easily move into the 40s sometime this year. Sell America trade is back on. It's very rare when you see stocks, bonds, and currency all going down at the same time, and that's why it's happening. And Europeans are now openly discussing dumping all of their U.S. stock holdings and bonds, which are worth about $8 trillion. You think that'll be a bad day for the market? Think again. Banks continue to fall on the Trump proposed 10% credit card cap. They were leading the market. That whole sector got destroyed and is uninvestable for the foreseeable future. Saks Fifth Avenue filed for bankruptcy the end source, the end destination of many of my paychecks at Morgan Stanley, since it was only a couple of blocks from Morgan Stanley headquarters. Uh, Weak Japanese yen is pushing the Nikkei upward. CrowdStrike won their lawsuit over the massive crash last summer, and Microsoft jumped 7% on second generation AI chips. 90-day T-bills up to 3.68. If this is getting too difficult for you to play, S&P 500 still very close support levels, downside support levels. Take something really major to break these lower support lines, like a comment from President Trump, for example. Just might be enough to do it. So momentum rising, that's positive for the market. SDS short play is sitting at the bottom. Might be worth picking a little bit up here while it's trading at a big discount. Volatility index, we're down at 16, but did pop up to 21 last week when we had that 1,200 point sell off in the Dow. Notice how fast the VIX index gave up those gains. People are just waiting to slam any kind of rally uh, in the VIX, as you can see here, here, and here. I was waiting for it to go up to 30 to sell, but we just didn't make it. Sanity returned too quickly, unfortunately. And here's the short volatility index. It is, again, coming off all-time highs. Dow average, a slow grind up, but going nowhere so far this year. Russell's giving up some of their gains, but they have been the lead index in the markets. And NASDAQ also short of all-time highs. Will this be a double top setting up? The October top and the maybe February top? We shall see. China grinding sideways for a couple of months, but I'm looking to get in there on the next good sell-off. China is basically taking over all the world trade in Asia that the U.S. abandoned through its tariffs. And they're carving out a bigger share of business in Europe. Going around South America, you see the Chinese are everywhere. Nikkei coming off new all-time highs. Nikkei is up to 54,000. That is a lot from the 3,000 the Nikkei was trading at when I first went to Tokyo. And by the way, you've had a 400% gain in the Japanese yen since then, too. Europe continues on a tear. German DAX absolutely on fire, new all-time highs. And again, it's increased defense spending that's powering the economy there. Germany's defense spending has basically doubled over the last 2 years. Emerging markets, of course, the number one market of all, gaining on both the currency and on the stock market, up 40% last year, up even more this year. That looks like a 5-point gain or 10% since the beginning of January. Of course, right next to Orlando is Disney Springs. It's like a huge shopping mall where restaurants, theaters, clothing stores, and of course, Disney souvenir shops populate the town. So I thought it was a great business idea, and it was just packed every night I was there. So let's look at our barbell portfolio. NVIDIA sideways for 6 months. What is this telling us? I don't know, but it's not good. Microsoft, had the tar of a software stock, which dragged it down for 3 months, got a monster rally from last week. Meta also bounced hard with other tech stocks, and Apple also bounced. So this has been a tech rally this week, and the rotations are getting faster, which make them harder to trade and harder to invest in. But all these big tech names are coming off of 20% sell-offs, which is what a lot of them did last April. Alphabet, new all-time high. Amazon taking a run at new highs. just laid off 16,000 people. Tesla, 6 month sideways move. Everyone is waiting for the sun, moon, and stars to line up, literally, for the SpaceX IPO, which should be worth about $400 billion. I remember when it was only $1 billion. So nothing happening there while the EV nuclear winter continues. Netflix, new lows. Stuck in litigation hell with trying to fight off Paramount on their takeover of Warner Brothers. Stay away until that gets resolved. And by the way, this is a horrific golden bear cross or dead cross, which is why you never touch these. You know, once these averages break, just every rally failed. And to quote my old friend Paul Tudor Jones, nothing good ever happens below the 200-day moving average, and this is the proof in the pudding. Palo Alto Networks also tarred with the software brush, but there's one thing you're going to need in the future, it's cybersecurity software. I think it's a screaming buy down here, probably a good leap candidate. I'll run the numbers after this webinar. Same with advanced micro devices. It's all about hardware in the AI build out. People could care less about software. Go no further than Salesforce, a software company, um, which is also in a sector out of favor, to say the least. Adobe, also another software stock. Snowflake, also software, screaming buy down here for long-term portfolios. And there's the ROM, the 2X technology ETF, really going sideways now for 4 months. MicroStrategy, the Bitcoin treasury stock, still bouncing along the bottom at the 85,000 cost of production for Bitcoin. This could be a major buy at some point. Everybody's waiting for a major washout. And again, I reiterate my claims about the dead crosses and the 200-day moving average. Oracle, still getting punished for over borrowing for an over build out of AI. Zoom, which we recommended just a couple of months ago, going ballistic on great earnings. So that is looking really good. And back at Disney World, this is a reproduction of the Montgolfier balloon from 1787, I think, in Paris, the first ever manned flight. Second half of the barbell. And let me take another question here. Let me just run through the questions. JP Morgan, a good leap candidate here. I'd wait for it to go down more. I think banks could be weak for a couple of months as long as they're being beat up by the president. And JP Morgan is CEO Jamie Dimon is not a Trump supporter. And that might cost the stock 10 or 20% right there. There's another question. Okay, reading that. Do you think energy and healthcare are undervalued? Absolutely, they are undervalued. They've been in bear markets for a long time. Healthcare seems to be under assault from the administration, so I'd avoid that. You had a 20% move down in UNH this week because of freezing Medicare payments at this year's levels. Of course, they all lose money at that price. Energy, very cheap, very high paying dividend stocks. I would play the service providers there, Schlumberger and Halliburton. And it just had a year and a half leap expire on Friday in Schlumberger. And it just made it over the finish line at the upper strike for a 177% profit on that position. Another question here from Lawrence, can uranium continue to go up? And I would say yes. It's part of the AI story, and there's no doubt that um, demand for electricity is exploding. In the latest freeze out you had in the United States, which I miss because I'm in Florida, um, you had major shutdowns of power centers in Texas and other parts of the country. So that means we are underinvested in our power grid, and it really has to increase 4 times in size. Uranium is part of that, and the new uranium designs are fantastic. Uh, but don't ask me, I only worked for the Atomic Energy Commission out of college. All we did is look at nuclear designs. Is copper due for a correction? You know, Lawrence is also asking if copper will correct when gold corrects. When gold corrects, everything corrects. The whole precious metals play, and the earliest that might happen is February 17th, which is the beginning of the Chinese New Year, who have been major buyers in all of these commodities. Um, you may not be buying copper ingots to hold on, to hide under your bed, but the Chinese are literally, because they have nothing else to buy as an inflation hedge. So, um, you know, all of these asset classes are all moving in sync. Um, and you have to watch all of them, all asset classes, to give you clues on the directions of any single one of them. And that, by the way, has been my strategy for the last 55 years. Wow, it's been 55. Ouch. Uh, People have been giving their seats up to me on the subway lately. It's kind of embarrassing. I go, I climbed the Matterhorn last year. How dare you give your seat up to me? Okay, well, any other questions? Um, Jose is saying, I have a lot of short positions. I'm losing money on all of them. Jose, we haven't seen anywhere close to closing indicators to indicate that we've had a top. So you're way early on your shorts. I haven't put any shorts out, and I love shorting. I make more money on shorts than I do longs. So wait, and again, the Chinese New Year is a good point to look towards, which is February 17th. It's better to be late on a trade, especially on the short side, than to be too early, especially when things are going ballistic, like silver, gold, and so on. Okay, what else do we have here? Um, is silver overdue for a correction? Absolutely, yes. The unknown is the correction going to start from 115 or 150? That's 150. And just for fun, I checked the 150 February calls, and you can get $2 for those. It's not bad money for a 4-week play. 50% out of the money. And if you want to be even more aggressive, the 140 put calls are selling for $4. I'm watching also for the short of the century to set up here. Okay, let's move on. Goldman Sachs uh, getting tarred with the bank comments. Morgan Stanley, the same. Could be just normal profit taking, but with the big banks, they really are getting hurt by capping credit card interest rates. Boy, that is a very tempting bottom on JP Morgan. And all the banks pretty much look the same. Bank of America, Citigroup, Charles Schwab is the broker. It's clearly aiming for new all-time highs. Any kind of weakness, I'd be a buyer. Same with Interactive Brokers. It's making a fortune on all this options trading volume, and they're moving big into the predictions market. Berkshire Hathaway shows you what happens when the founder retires. Um, and they're very heavy in banks and tech. That's another reason they're going down. They're in the wrong sectors. And also, Warren Buffett never bought gold, never bought silver, and Berkshire's being punished for that. Chill. Air conditioner. Air conditioner. It's getting too hot. BlackRock is a buy, making tons of money on the rising market. Metals just gone nuts. Boeing, clearly a major reversal there under new management. I'd be buying any dips. This thing could go to 450. General Motors keeps rising. I don't know why, but I'm not touching. Good thing not to touch things you don't understand. And if we have a heightened trade war with Canada, General Motors is going to get hit big time. UPS laying off 30,000. Caterpillar, the stock that never goes down. Deere and Company also followed Cat up. Freeport up 56% in 3 months. We had leaps on this. Everybody is just screaming about it, making tons of money on copper. Most of my followers never heard of copper until they ran into me. Everybody's in it. Everybody's making a ton of money. Walt Disney still going nowhere. Industrials, all-time highs. Union Pacific, long sideways move, and that's partly because of the end of trade with China. They are the preeminent east-west rail. Walmart just coming off of highs. Costco, huge gains on bets that the Supreme Court is going to rule in their favor and declare uh, the Trump tariffs illegal. Delta coming off new highs. By the way, I saw an empty seat on a Delta plane when I flew out to Florida. First time in years I've seen an empty seat on a Delta flight. Transports coming off new highs. Healthcare still rising. But this healthcare group includes lots of biotechs, and that's why this index is rising, even though individual companies like UNH have been slaughtered. Amgen, one of my favorites, still rising. Visa killed on the credit card cap idea. This is probably a great buy down here and a great leap because the 10% cap will never happen. The president doesn't have the legal authority to enforce that. Okay, consumer discretionary up. And another video from Sarasota. And this is what happens when you follow mad hedge trade alerts. You get to cruise around in your yacht. Okay, let's move on from there. Okay, more questions. Here's someone, Kent pointed out, CBOE might be a good candidate for handling the new explosion options volume. Absolutely, I would agree with that. It's been watching it for a long time. I just never got a time to research the company. There are just so many days, so many hours in the day. And okay, what else do we have? Yeah, nat gas, I wouldn't chase it up here. It's a one-hit wonder. We got the freeze last week. That caused huge increases in the price of natural gas. Don't chase it up here. The next thing for it to do is for it to get warmer. Um, Ralph is asking, is it time to go into Robinhood? No, but the time may be getting close. Robinhood and Coinbase and MSTR are all tied to the movement of Bitcoin. And when Bitcoin turns, all of these stocks turn, and I will be into all of those big time. You're looking for stuff to buy on the next leg of the market. That is a big group. Housing is another big group. for cheap stuff ready for an explosive move upward. You just don't want to be too soon in these things and get your head handed to you. Okay, Japanese bond markets crashed, taking yields to 4.3%, all-time high for the 30-year. New stimulatory budget and weak yen are expected to cause inflation. Do you know any other countries that are doing this, stimulating their budget and causing inflation? Uh, Japan's debt to GDP is now over 200%, highest in the world. We are at 150, closing in on the new all-time high. It rattles the world because a lot of financing was done in formerly low interest rate yen world. It all shows you that record debts are a global problem, not just an American one. And you have all of these governments trying to tap the markets at the same time. This will only end in tears, but not yet. Denmark dumped all of their US treasuries in protests of the assault on Greenland. That was $100 million worth, not much, probably a day's trading volume, but it still shows where the sentiment is. Okay, TLT, going nowhere is a no touch. Here's the Treasury yield, 4.25. We get a breakdown in the bond market in the TLT. The yield could jump up to 5%, and that is your 20% correction in stocks right there. Junk bonds just keep going up forever. Good yield, high quality, and the default rate is never as high as people project. It's like 2% for the junk bond ETF. Muni bonds keep grinding up to new highs on a flight to safety bid. Emerging markets, just one of the top performing asset classes in the world, on fire. TBT also going sideways. Annaly Capital looking great. That's the leverage REIT play. And that's me at the bar at Disney Springs. And I can't remember the name of it. Planet Hollywood, that was it. Me alone at the Planet Hollywood bar, testing the local IPA. Okay, on to more questions here. Should I buy Meta before earnings? Answer no. First of all, Meta's had a nice 15% pop in the stock. Not a good entry point. Second, you never know how stocks are going to react to earnings these days. They could announce good earnings, the stock will sell off 10% anyway, or they could announce bad earnings and good guidance, and the stock will take off. So it's too much of a random bet for me. I'd rather avoid earnings announcements. They have become completely unpredictable. Let's see if we have any other questions. The 10-year US Treasury rate or US bond rate has been stuck at 425 for a while. Is a move to 5% possible? And the answer is absolutely yes. US government has to borrow or refinance $11 trillion this year. That's more than double they've ever tried to tap. I don't think the markets can take it, especially since many foreign investors have fled that market. So that also may be a cause of our next 20% correction in the market. And let's see what else we have here. Let me take a look here. Questions. My college student son is planning to buy his first stock. What should it be? Well, since he is a college age student, I recommend he buy Robinhood or Coinbase. These companies are aimed at that generation and their stocks are cheap. So as soon as we get any kind of recovery in crypto, these stocks will take off. And um, and he'll get a good experience with the stock market. What did my kids uh, buy when they entered the stock market? Well, I turned over their entire college funds to them when they were 18 and just entering college. I said, keep it all in treasury bills and buy NVIDIA. And this was when NVIDIA was about $40. So they never asked me for money anymore. I don't know why, but they're pretty happy with their NVIDIA stock. And for my older kids, I told them all to go into gold 3 years ago. So they never asked me for money either. I'm just wondering, maybe they don't like me anymore, or maybe they just don't need the money. Um, Another question here is Tim Cook soon to retire? I actually called Apple last week, asked them if the rumors were true, and they said no, they don't know anything about it. So uh, I suspect somebody had a short-term options trade. They wanted to expire in the money, and they spread rumors, and the stock dove $6, then bounced right back. You see these kind of fun and games in the options market all the time. So foreign currencies, Trump comments crash the U.S. dollar. A return of sell America trade prompts major crash in the dollar as foreign investors dump all U.S. assets. U.S. dollar faces prolonged decline on the back of coming Fed interest rate cuts. We may not see another 20% move down in the dollar uh, as rate cuts loom. Emerging markets have been the best currency play of 2025 and so far 2026. Buy the Aussie, Euro, British pound, Canadian dollar, and now even the yen has started to turn up against the dollar. Shows you how bad things are. And these moves you only see once a decade in the foreign exchange market. Look at this Australian dollar made it up to 69. Um, a Japanese yen, major move there. Euro, 4-year high against the US dollar. British pound, gigantic moves. Emerging market going through the roof. This is a robot I found at the Lincoln Avenue shopping mall in Miami making a delivery. This guy is coming for your job. Yeah, he's coming for my job too, probably. All right, let's see if there are more questions here. And here's somebody asking, am I adopting any new kids in the near future? Can I be one of them? Sorry, those places have already been taken. 5 kids. I've done my job. I've done my duty. No shrinking population growth here. Okay, other questions? As unemployment surges, will stocks benefit from lower labor costs? Well, there are only about a dozen companies that are benefiting from lower costs as a result of AI, Amazon, Apple, Google, and so on. The local pizza parlor is not benefiting at all from AI, nor is the baker, the candlestick maker, the barber. Uh, None of those people benefit, but they are all being hurt by higher costs. So you remember the tech is only 40% of the economy. The other 60% is suffering in this economy, except for the oil industry, which is only 3% of the economy now. Maybe it's all the way up to 4 now. Um, so let's just say that governments advertise their successes more than their failures. And this is something I've been observing for the last 60 years. Okay, any other questions? We're up to energy now. Um, is day trading a good idea? Day trading is a terrible idea. 90% of the people who try it lose money. The 10% who do make money are heavily plugged into the meme scene. Um, following all the latest tweets, all the latest rumors, and bid up stocks like GameStop and now silver, which has become the number one meme stock of the day. And it's incredibly a volatile business. So um, you hear stories about people making money day trading. Very few of those stories actually pan out to real profits. So better to take a long-term view, better to index and then take a one-year cruise around the world. Those are the people who make the most money. And when they get back, they take another cruise because they made so much money. Okay, Venezuela needs $190 billion in spending to restore their oil fields, and all that business will go to the US because they're the ones who built the fields in the first place. Companies like Schlumberger, no, it's not Schlumberger, it's Schlumberger, the French pronunciation, and Halliburton, two of my favorite companies in the sector. We just had a Schlumberger leap expire at max profit. Um, and 2.59 a gallon in Florida for gas. It's about $2 a gallon cheaper than California. Uh, if the Ukraine war ends, huge Russian inventories will get dumped on the market. Venezuela production could add another 3.2 million barrels a day if it's brought back to full production, which is a big maybe. Um, so there's oil getting a little rally yet off of the Venezuela attack and U.S. seizure of energy of Venezuela's oil supply. Uh, who knows where the money goes for all that oil sales? Oil tanker these days holds around 500,000 barrels. So do the math, 500,000, times, $60 a barrel is $30 million. No, a lot more than that. $300 million per ship. All that money's going somewhere. I heard it's all going into Bitcoin, so it's untraceable. USO getting a rally too. Uh, Energy Select, which includes Schlumberger, uh, new all-time high, not a new all-time high, but new high for the year. Having a great run. Probably kind of late to get involved here. ExxonMobil, new multi-year high dividend payer. Oxy coming off the bottom, that's a big Buffett holding. And Nat Gas, you can see the huge rally coming off of the horrific winter. And by the way, please stop sending me pictures of snowfields in front of your house with the middle finger salute attached while I'm suffering here in 95-degree temperatures in Miami. I've already had enough of those. Comico, new all-time highs for uranium, probably keeps going. It's another inflation play, along with gold, silver, copper, palladium, cobalt, anything hard. Vistra isn't participating. I don't know why. Probably a buy down here. And there is the view from my room in the Fontainebleau. And I always pick the room that was used in the Goldfinger movie, 1962, where Goldfinger was being spied upon by James Bond from the same room. I'm not going to tell you the room number, otherwise I'll get booked out for the next 5 years. But this is where Goldfinger was playing cards with James Bond. Beautiful views. Love staying there, but it is expensive. Valet parking, $70. The nice thing about condoizing is the room that cost $2,000 a day 10 years ago, you can now get for $500 a day because there are literally 20 condos offered on Airbnb right now. So it's a 75% discount for a luxury suite. I'll take that all day long. And there's the bar at the Fontainebleau. Also incredibly expensive, $25 for a drink. Okay, let's see. Got any more questions here? Um, Okay, what to say about gold and silver. Everybody's long. Everyone's going nuts over it. Uh, and it is too risky to enter here other than on a very short term, may I say, day trading basis. It's almost too risky to carry an overnight position now. Gold top 5,300, silver at 115. And somebody, I think it was Deutsche Bank, predicted silver would hit $150 by the end of the year. And my response is, well, yeah, but we may hit that by the end of the week at the rate it's going. But there is a short of the century setting up here somewhere. Uh, as soon as we see silver lose momentum, $50 out of the money short calls and call spreads, put spreads may be the way to go for some easy money. Um, and of course, the next time this may happen is Chinese New Year, where major buyers of the metals disappear for 2 weeks. Political instability, the siege of Minneapolis, it has become a factor in the metals market. AI build out, creating exponential growth in demand for silver. Of course, there are much cheaper alternatives with silver at 115 an ounce. I am out of all positions and just doing 1 week trades and not even bothering to go stay long over a weekend. When an investment reaches your target, the most dangerous thing you can do is raise your target, which a lot of people are doing right now. Okay, so precious metals. Watch the gold silver ratio for hints of a market top. The 4,000-year range, 3 to 1 to 10 to 1. 2008 range, 40 to 1 to 100 to 1. Now we're at 50 to 1. Conclusion, silver is vastly overpriced over to the historic gold ratio and is expensive. Short of the century may be setting up. Shorting silver, long gold has become a major hedge fund trade. And I know several people are piling into this. And by the way, a similar trade they did a year ago was to short MSTR and buy Bitcoin because it was trading at a 50% premium, which is now completely gone. Here is the gold silver ratio for the last 3 years. You can see the move really started in April and just took off like a rocket after that. Gold just, you can't touch any of these moves. They are so insane. Uh, there's the GDX, gold miners, Barrick Gold. There's Newmont Mining, silver outright, silver miners going up even more. Wheat and precious metals, we recommended at 40 last year, now at 155. And platinum, also ballistic. Only 4 producers in the world. One of them is Russia. Uh, okay, this ended up in the wrong place. There's a Disney restaurant, Disney Springs, real estate. D.H. Horton Beats, um, and incentives was the name of the game there. Existing home sales jumped 5% in November, pending home sales down 9% in December. Midwest was the hardest hit, followed by the Northeast. Average rate on the popular 30-year fixed rate down to 6.06. That's where the action is coming from. Mortgage refi demand up 40%. So there's Crown Castle International, big dividend payer, probably a buy down here. The U.S. Home ETF, D.H. Horton, probably a buy here. So what do we do? Stocks stand aside, way too risky and too expensive. Bonds stand aside, going nowhere, facing a possible crash. Commodities buy dips, currencies buy dips, precious metals buy bigger dips, energy buy dips, volatility sell over 30, real estate buy dips. This is the freeway headed south in Florida. And I like that big, fluffy sky. So this is John Thomas, the Mad Hedge Fund Trader, signing off for today. Oops. Or let's try and do this again. Good luck and good trading. Let's see.